Welcome to this Payments Unpacked podcast. Today, I'm really pleased to be joined by Richard Ransom from Bottomline. Richard, thank you so much for joining me today. What I want to do is just jump straight in and jump in by looking at some words that are on your Bottomline's landing page. The Bottomline's landing page claims that you as an organisation are transforming the way businesses pay and get paid. And it states that it's time for better payments and bigger results. Now, I'm pretty interested in making payments better. So with this in mind, Richard, perhaps if I could just ask you at the top of this recording to introduce yourself and introduce Bottomline.
Hi Mike, thanks. So I look after Bottomline solution consultancy for corporates globally. And why I'm on this call, I think, is that I'm one of Bottomline's industry leads. I've got over 28 years of experience specifically and particularly in UK payment systems. Now, interesting point about transforming the way businesses pay and get paid. And Bottomline are a global organisation and we're a global leader in business payments and cash management. So our secure, comprehensive solutions modernise payments for businesses and financial institutions globally. We've been doing this for over 35 years and now we're moving more than $16 trillion in payments annually, which is a fair sum of money. Well over 2 trillion in the UK. So Bottomline's committed to driving impactful results for customers by reimagining business payments and delivering solutions that add to the bottom line. So we are really interested in solving business problems and looking at how organisations make payments, collect money, and the processes behind that in that sort of business payments cash lifecycle. And sort of bring it into focus for today's call. In the UK, we process over half of UK's Bacs payments and collections for over 10,000 organisations. So we do that not only for corporates, not-for-profits, government, we also do it for very large banks too. So hopefully that gives us a really good insight into what the corporate UK is thinking about payments and payments moving forward.
Thanks, Richard. I mean, that introduction from you just sets you up perfectly in terms of today's conversation, because we're going to be looking at the vision and strategy for payments in the UK. We're going to be looking at payments going forward, and it's really based upon the national payments vision, which sets out the UK government's ambition for a trusted, world-leading payments ecosystem that's going to be delivered on next generation technology where consumers and businesses have a choice of the payment methods to meet their needs. And if you look at that vision statement, it's really based, and the ambition from the government, it's really based on two key foundations. The first is not for today's conversation, but the first is a clear, predictable and proportionate regulatory framework. But the second is absolutely for today's conversation with you. And the second is a resilient payments infrastructure that supports innovation. And you and I were talking about the scope of this call a few days ago, and we sort of concluded that there'd been a lot of commentary on the impact of a national payments vision from the perspective of payment system operators, from infrastructure providers, from the perspective of payment firms. But both of us had seen less coverage on the impact on corporates and particularly payment instruments outside of the faster payment system. So the angle we're going to take today in today's podcast is the potential impact of a new payments vision and strategy from the perspective of the corporate, but particularly from a Bacs perspective. So, Richard, with that perspective set, the stage is yours. And let me start with a question about direct debit, a product that you've been involved for a long time, and I have lots of history in as well. So, for over half a century, we've seen a fantastic performance from direct debit, and we're at a point then, a few months' time or a few weeks' time, direct debit will smash 5 billion transactions per annum. So let me ask you a two-stage question. The first question about direct debit is from both a consumer and a corporate perspective. What's there to love about direct debit?
It's a great question, Mike, and I wish more people loved direct debit as much as I do. So, direct debit is trusted and ubiquitous. I can look at my bank statement and, I've got probably about 15 direct debits at least on there. And the reason I sign up to direct debit and the reason that billers provide direct debit is it is, as I said, trusted and ubiquitous. We recognise the direct debit logo. We know what the service can do. I wish more people understood the direct debit guarantee because that is really good. And getting money back under the direct debit guarantee is really straightforward. So that's one really key point about direct debit. And although credit card has the chargeback mechanism, the way that you get your money back under chargeback is way, way more complicated than the direct debit guarantee. If you've got a genuine claim against direct debit being taken incorrectly from your account, that money gets back to you almost instantly. And I think some of the other things that people forget about direct debit is when you, as a consumer, change banks, the account switching service ensures your direct debits keep happening without interruption. You don't need to worry about that. Someone else is managing that switch between banks. And it's the same for billers as well. When they change banks, the process is so slick that you wouldn't know as a consumer that your electricity company has completely changed bank relationships. You wouldn't notice it. Nothing would change. So back onto the biller's side. For billers, it's predictable and reliable. It's relatively low cost and it's extremely uncomplicated once it's in. It's also bank agnostic. So however many bank relationships you have as a corporate, and larger corporates tend to have many, and if you're acquisitive, you tend to pick up new bank relationships. The service is bank agnostic, so you connect directly into the Bacs infrastructure the same way whoever you bank with. It's entirely suitable for regular scheduled collections. That is its strength. Because it is so well established and ingrained, organisations can predict very easily how many direct debits are going to fail, how much is going to bounce, who to provide it to. So as a business, predictability, reliability, all these things are really important. So that's what there is to love about direct debit. The fact it's so established, and the fact it is still growing with other collection types out there is remarkable, given how old it is.
Well, you've been a massive advocate for direct debit, and I know you're not just making it up. That's something you've demonstrated over many years. But both of us, neither of us would state that everything in life is perfect, and I think we both agree that direct debit is no exception. So, if I gave you a magic wand and 3 wishes, what wishes would you bestow on direct debits?
So the first 2 are more about process and the mechanics of direct debit, and these are the things that speaking to corporates over many years have given me. The last one is a bit more personal and to do with what's happening today in the industry. So I think removing the wait between sign up and first collection, and if you don't know the direct debit process that well, if you sign up for direct debit, there is a gap between your sign up and the biller being able to take the first collection. I think we've proved over many years there doesn't need to be that gap. And if you look at SEPA direct debit, for example, that mandate to collect money, that direct debit instruction travels with that first collection. So that could be fixed. And I think the other thing that really sticks out for us from billers is the failures need to be communicated to the biller and the payer instantly. At the moment, you're waiting sort of 5 to 8 days after the collection has tried to happen before you find out why something's failed and if it's failed. So those failures should be able to be communicated through our electronic payment system almost immediately. So those 2, they fix some of the things which are a little bit painful for the biller. Mostly they're not huge, but they're painful. The last one is really the wish I have, is that people decouple the contract and the bill from the direct debit collection in our consciousness. Direct debit hasn't collected more than you expected this month. That is down to the biller and their systems, and perhaps your understanding of your contract or your agreement with the biller. So I think a lot of the detriments around direct debit and the commentary is people need more control over direct debit, but I think the understanding of where direct debit starts and where the contract with your biller finishes is something that we need to get really clear before we start deciding that direct debit can be completely replaced or these are the things that are wrong with it. I think a lot of the issues that people have with billing are around the contract and the biller systems and not with direct debit as a process. Direct debit as a process isn't making those mistakes. Direct debit is doing what it's told to do.
Perfect. Just an aside, you haven't mentioned the clearing cycle or the processing cycle. Is that an issue?
And I think we might move on to this later, but people don't see it as an issue because typically direct debits are regular scheduled collections. So my electricity company knows that my direct debit will be going out on I'm expecting to pay that on the 15th. So my bill isn't going to change up to that point. I've already agreed what I'm going to pay sort of a couple of weeks in advance. So 3 days, 5 days, 1 day, it doesn't matter. I think on that first collection, yes, that's potentially where that clearing cycle is a bit painful, and there are potentially ways to get around that moving forward. So putting open banking perhaps as the first collection and putting the rest on the solid and reliable direct debit service might be a thing. But yeah, if it's a regular scheduled collection, 3 days doesn't really matter. I know some use cases of billing they'd like to be a bit more up to date, but then they're perhaps not really suitable for direct debit.
Okay, no, thank you. So we've talked about debits. There's another attribute to the Bacs system, and it's called direct credit. And at a smidgen under 2 billion payments per annum, it is clear that direct credit is still pulling its weight in the UK's payment mix. But how would you describe direct credit's positioning with something like faster payments?
Yeah, it's a really interesting question, and I think if I looked at, if I tried to predict what would happen 18 years after sort of faster payments went live, I would imagine a lot more of the Bacs direct credit traffic would have moved. But we've not really seen that. I think for business payments especially, most account systems, ERPs, payroll systems are operating in a manner that suits the low-cost, reliable, bank-agnostic Bacs direct credit service. So faster payments has its place, and there are use cases that work with that. But we haven't seen that massive shift of B2B direct credit to faster payments outside of SMEs who are driven to use faster payments just because they tend to use internet banking rather than Bacs solutions or host-to-host or the more complex online banking systems. So it's really interesting, isn't it, that there hasn't been that massive shift. And I think what we see reflected globally is that most countries who have sophisticated immediate payment systems that are much less mature and much more innovative than the UK's one will still have a domestic ACH, a low payment, high value payment system coping with bulk payments. So I think they have different jobs to do, and I think where large scale migration was going to happen, I think it kind of has.
Cool. I mean, we have seen, as you say, that natural migration from direct credit to faster payments, but I like the comment you just made that both systems have a job to do. So it'd be interesting to see how that plays out in any future infrastructure. So we've talked about debits and credits, push and pull within Bacs, but the other attribute of Bacs is it's a system based on batch and bulk payments. And my next question is a little bit blunt, so hopefully you'll forgive me. But the National Payments Vision calls for a resilient payments infrastructure that supports innovation. So as we think about designing a future payments infrastructure, do batch or bulk payments even have a place in a future infrastructure state?
Yeah, it's another question which we see quite a lot, and I think there'd be naturally if you don't look deep enough at the way that businesses work and business processes operate, you could assume that everything could be an immediate payment. Payroll would seem obvious. Get paid exactly when you want to get paid to that minute. Accounts payable, you would assume that most businesses want to pay supplier invoices immediately, but the world doesn't work like that, and credit gets in the way, and most businesses operate on weekly, monthly or quarterly cycles and rely on regular scheduled payment collections to keep their business process predictable, controllable, and to keep the cash flowing. And you know what? People rely on regular scheduled payments and collections to keep their cash flow as predictable as possible. When their payroll happens, when their pension happens, when benefits get paid in, when the bill payments are out. So where any future payment or collection value is known in any of these processes, accounts payable, payroll, bill collection, batch is really important because it's low cost and efficient. And this is why the majority of economies, as I say, still have automated clearing houses, no matter how innovative or far ahead their payment systems are. It's until businesses start operating in in an absolute 24/7 real-time operation, and I don't think they're about to start doing that. I think we still need batch and bulk payments, and I think one of the things that both of us know, Mike, it's once it's working, batch and bulk is pretty efficient and it's low cost too. So you need to be able to scale, but this stuff just works, and an overnight process is fine if someone's just expecting to be paid on Wednesday rather than at 9:15 exactly on Wednesday.
Perfect. So we've looked at push payments and pull payments. We've looked at batch and bulk. I just want to expand the thinking a little bit, Richard, and think about the rise that we've seen over, 17, 18 years of the UK's near real-time payment system, faster payments, and ask you a question from the perspective, for the answer to come from the perspective of the corporates you work with. If you think about the clients you work with and institutions you talk to, what expectations do corporates have for the future of retail payments?
Yeah, and unsurprisingly, corporates don't find payments as exciting perhaps as I do. But when we talk to corporates about what's going to happen in the future, which we do, what that roadmap looks like, they are looking, the things that they are most worried about, how much it's going to cost to make things change, not can it solve A, B and C problem, which is interesting. So I think either they've got very used to something that works very well, or they're not telling me something. So I think the corporate expectations are always going to be around security, efficiency, reliability and low cost. And this has to be a minimal impact on their operation. So any sort of change, moving from a 3-day to an immediate payment cycle, is a huge amount of change and has implications across their operations, not just in the back of a payment system. And corporates aren't necessarily looking for things to be immediate, and that's partly for the reasons I mentioned. And even payroll, where up to the last minute changes are often made, they still like the predictability of it and having a buffer between here's my cut off on Wednesday, the payments are going to happen on Friday for the majority of payroll. And where immediate payments are more sensible, like paying contractors, they've already moved their payments across to faster payments. And I think corporates who want to utilise immediate payments can already do this with their banks or through direct corporate access to faster payments. Yet, direct credit volumes are still fairly stable. And I've got to add as well, Mike, as we're talking about their future expectations of payments, many businesses still write cheques and have not had a compelling enough argument to move away from those yet. Despite the fact that those volumes are going down, they're still seeing the use case and they're still seeing the need to do it. And I think on this sort of perception that everything has to be immediate, I was on a panel recently at an accounts payable conference with the payables manager of a UK household name corporate, so a huge organisation, one of the UK's largest employers. And when I asked about immediate payments, they said, and this is really interesting, if I have to make an immediate payment, something has gone seriously wrong. And this kind of reflects the predictable nature of finance in most organisations. So their point was, they are working against multiple contracts, payment terms. Their process is such that they should be able to predict what the monthly payment run is way in advance of that happening. They should be on top of the terms, the invoices should come in on time. So an immediate payment suggests A, something's gone wrong in their process, or B, and the thing that they came to was someone is trying to commit a fraud. So someone is suddenly saying you need to make this payment to this, pay this invoice immediately. So therefore immediately went to there's something really wrong with that. And I thought that was really interesting, especially as I looked out across the audience, most of the people were nodding their heads. So we can't assume every payment's needs to be immediate. We can't assume every invoice gets paid immediately. Although that sounds like a really great idea. If you go back further into how businesses work and cash flow works and how treasury works, you'll see it's simply not that easy. And if you talk to accounts payable, then often their want to pay someone on time or on a particular day can get overwritten by corporate treasury because they need that money for something else. So I think it's a really interesting point, and I think corporates are just looking for that security and reliability. And perhaps when we start seeing more use of extended data within ISO, they'll start to look for that. But the organisations hopefully we'll talk about ISO later. The organisations that are talking to me about ISO, they more tend to be in the financial services end of it, and they're more worried about impending regulatory deadlines that they may or may not be forced to follow, rather than, hey, I can see an opportunity for doing more with my payments and improving my reconciliation today. That's not the biggest problem. That's not the things that they are thinking about.
Perfect. I love the insight into corporate expectations for the future of retail payments. I bit my tongue when you spoke about checks. Would be lovely to have a conversation another time with you about checks.
Yes.
86 million checks a year. There are less checks in a year of check processing than there are on Bacs' busiest transaction day. So let's come back another time.
Yes, we definitely should. I think the stat is there's 1.5 checks per person per year written in the UK, which just seems, it's so interesting.
We'd love to do that. Let's not get deviated from today's subject. Let's come back another time. Look, let me add a regulatory lens now to what we're talking about, because just in the last few weeks we've seen that the Payment Systems Regulator has decided to revoke a couple of legal instruments. They're called Specific Directions 2 and 2A, but those legal instruments required the operator of the Bacs payment system to procure any future contracts for the central infrastructure services in a competitive manner. So with those specific directions revoked, what does this particular news mean for the future of Bacs? And in your answer, if we've seen that specific direction revoked, what does it mean for the future of Bacs? Should we be changing Bacs? Should we expect to see something substantial about Bacs in the National Payments Vision and its associated strategy?
Yeah, and I've been following replacements of Bacs and faster payments like you have since 2016. So, and what I know now is it's really hard to do this stuff. With the best will and the best brains behind it, it's really difficult. And I think removal of SD2, in my mind, removes noise from the National Payments Vision strategy. It's one less risk and dependency on the go-forward plan. So sort of parking the Bacs piece and not making that something you have to add to the plan and work around. And I think it enables what to do with Bacs to be shifted further out, which isn't necessarily a bad thing. I think the focus on faster payments replacement and making personal payments easier, that appears to be the priority, and it's certainly the thing that people are more interested in fixing at the moment. As I said before, businesses aren't really saying that Bacs is broken, and I think organisations and billers aren't necessarily saying that direct debit's broken yet. So what to do with Bacs is a really interesting one, isn't it? And I think if you look at direct credits, you could move direct credit into a new immediate payment system, but with a bulk and batch method built in, and that could mean you have a lower cost same day or next day service. We could go back to talking about ELLE and things like that, but those things would I think work in that. Now we've got to remember that running a bulk payment system batch payment system is quite difficult, and those volumes are big, so you're throwing a whole load of volume onto this system. But if we are starting from scratch on the immediate payment system, that could be built into that from the beginning. And I think direct debit is the one that's the difficult nut to crack, because it's so embedded in the fabric of business systems and operations. So if you try a wholesale move away from what we have today with Bacs and the way it works, it's going to be, there are major impacts on the economy. We talked about 5 billion direct debits. So that's got to go somewhere, but so do all the mandates, the direct debit instructions, the back office systems, the operational processes, the impact on credit and treasury, all those things change. So I think, in my mind, SD2, it does park what to do with Bacs, but I think it helps the rest of the program do its thing. What I would really like is to feel like what to do with Bacs, direct credit and direct debit and account switching is built into the thinking behind what happens next, rather than let's build an immediate payment system that can accommodate account to account. Let's do that, and then we'll think about those things later. So, my view is, I think it was inevitable, given where we are in terms of the timeline, and I don't think it's a bad thing. I think it allows clearer thought on the future without having to rush to a decision. I think, as I said before, this has been a long journey, but we can't mess it up. And the new approach to the national payments vision is welcome, because I think the old approach was, it was an iterative approach that wasn't working. Need a blank sheet of paper approach and a slightly different way to think about the issues ahead.
Perfect. I mean, I'm absolutely with you. I think revocation helps the payments vision and strategy to do its own thing without constraints. I agree with you. There might be a different answer to direct debit, to direct credit, and designing in particularly a direct credit solution into a future immediate payments or instant payments or whatever we call it, faster payments variant, would make a massive load of sense. You've used ELLE or ELLE, depending on how you say it. I wrote a blog around ELLE recently. I'll try and put the link in the comments for people if you're interested in the idea of ELLE. It was the Scandinavian model that never was. ELLE standing for early, late, late, early. So interesting concept that preceded faster payments. Let's stretch ourselves now a little bit and think a little bit wider and think about the fact that open banking and account-to-account payments have been front and centre of the payments debate for quite a while now. I think it's probably true to say that open banking volumes are taking time to establish themselves, and we're just seeing commercial variable reoccurring solutions arriving. So from a corporate's perspective, how do you think open banking should be reflected within a vision and a strategy for payments in the United Kingdom?
So I think I'm sort of urging a little bit of caution and some level-headed thinking around where open banking will fit in an account-to-account into the way that payments work in the UK. And I get open banking and the use cases where it's working. So Bottomline are a regulated provider of open banking services, and we're shifting huge amounts of money in single transactions using open banking. And there are lots of use cases where we're seeing first payment to account for direct debit. That detriment I talked about earlier, that really works. And personally, in the last 12 months, I've topped up an ISA, paid for premium bonds, I've paid a tax bill, I paid the balance of a holiday, and I bought a second-hand car, all using pay by bank or open banking. Now, the reason I did all those things is because I'm a payments nerd and it was just fun to do it for me, to see how that would all work. I can't, it's at the moment, it's difficult to see how consumers choose between those methods unless they are sort of front and centre. And I think things like account-to-account payments, it's really important to think about alternatives to anything, so bringing some competition to credit card potentially. But that account-to-account payment will need to be as efficient as just tapping my phone on a reader. No, just clicking the button and pointing my face at my phone is enough to make a payment today. That's all I care about. So anything we do using account-to-account has to be as easy as that, and I shouldn't have to then log into my bank and then authenticate again. It should just be click, click, and you hear the Apple Pay ping, and then you walk away. So we need to be cautious about the impact. I think in terms of commercial variable recurring payments, this is something that we're interested in, given that we do nearly 60% of UK's direct debit. We aren't seeing CVRP necessarily matching the issues that most billers are having. And I think the cost of change will be substantial. So I think we shouldn't be building anything that assumes a cardless and direct debitless future where all payments are immediate. There needs to be scope for all. I don't think variable recurring payments can replace direct debit, even over the long term. It's not the same thing. I think open banking payments have to be commercially competitive for the biller, and we're not necessarily seeing that happen. So I think it's a world where lots of things coexist, rather than it's all about account to account. Let me know card. Open banking will replace any form of billing. We'll still have continuous card authority for credit card as well in the future. So I think a vision for strategy of payments in the UK has to build in the need to make things more efficient and better for open banking and pay by bank and account to account, but it also has to continue to serve, you know, lots of other use cases and businesses in the UK.
Thank you for that. One of the purposes of Payments Unpacked TV, as we drop each Monday night at 8 o'clock a video, is to try and stimulate a conversation the next day, either on Teams or by the water cooler. So it'd be really interesting if folk tomorrow start thinking about what do they think, how do they think open banking should be reflected in a future strategy for payments in the UK? What part does open banking play in making payments more efficient, cheaper, more rich in terms of the functionality? You know, what is the play for open banking over and above the payment mix that we currently have today? Richard, this is now my penultimate question, so you're nearly at your lunchtime, I guess. Let's just take another step back and think about if we really think about a truly visionary strategy for payments, that whole idea would challenge the traditional concept of a clearing and settlement mechanism. So if we think about that traditional concept of a CSM, a clearing settlement mechanism, how would you describe the balance between the opportunity and the challenges in accommodating new instruments like CBDC, like stablecoin, like tokenized deposits?
Yeah, and this is something which has been top of mind when I've been talking to corporate treasurers recently. Something I certainly spend a lot of time on LinkedIn and on various blogs looking around these areas. And I've been following the development of CDBC in the UK and the Regulated Liability Network. What we're seeing about tokenized deposits and the growth of stablecoin and the impact of the Genius Act in the US on the way that people think about the way that money could move. Now, there have been a lot of CDBC pilots, and what's come out of the back of that is no real clear answer. So these are new ways to move money around, and on paper this all looks really good. CDBC helps to manage clearing and settlement in a completely different way, and in a way that allows potentially CDBC a personal wallet with the Bank of England, which sounds like a great idea. But the opportunities are the use of new technology to make things more efficient, to reduce risk, and to decrease the time for money to move between one organisation and another where that matters. But there's also cost involved in this, and there are a lot of questions about regulation. I think the Mansion House statement and the response by Bank of England showed that stablecoin was one of those things that the governor's not particularly keen on. I think it's a more unregulated source of money. There are definitely advantages in for some cross-border flows in using stablecoin, but there are a lot of different providers, there are a lot of different networks, there isn't ubiquity or standard. So moving money around any of these different networks will still need a lot of thought. Now, tokenized deposits make stablecoin a bit safer because they're backed by real bank money, but are they in a position to replace cash? Not really, because you have to do everything online. Are they going to solve all the problems with things like cross-border payments? Today we'll still have AML, still have KYC. Payments will still get stopped because they don't have the correct purpose of payment code in them for a particular geography, or something will need changing, there will be an error. So we need to look at those, but only if they are going to make things better for everyone. Only if they're going to increase efficiency and reduce cost and make our lives easier. So there isn't any reason in my head to pay a premium on what I'm paying today around payments processes, which seem to work fine for me. But I think it's a really tough one to crack, because there is so much research, information, conflicting views. Is stablecoin better than tokenized deposits? Can we link all of these things together, CDBC, tokenized deposits, and a stablecoin? Can we put them in the same pot when we look at, could that be a way that retail payments could be made? Could I fund my wallet with different currencies and have my stablecoin wallet available and just tap that, with Apple Pay associated with my phone, double click, get the Apple Pay ping, and I've paid with a stablecoin to the merchant. The merchant's taken that money, they've either flipped that into a stablecoin or they've turned that into real currency. But how important is that to me today? That's a difficult one to do, but I think it's one to watch. And like a lot of other things in payments, there's a lot of venture capital money behind this, so I don't think it's going to go away for some time to come.
Thanks. I guess the challenge is working out whether the new kid or the new kids on the block actually make payments better. And better might be richer, safer, better functionality, whatever. But, unless it takes us forward and doesn't jeopardise the resilience and the safety and trust and confidence in payments, it's good to look at, but we've got to be careful not to make things unstable. Look, we've talked about future vision and strategy and infrastructure. We've talked about Bacs. You cannot have a conversation about those subjects without thinking about standards. So my final question is about standards. It's fairly certain that at some point we'll see a migration from standard 18 in Bacs and message 85, 83 in faster payments to ISO 20022. The first part of my question is, if we're thinking about the mindset of change of standards, what are the strengths and the weaknesses of the current standards used by the UK's domestic payment schemes?
I think I'll start with standard 18, which has been with us for a very long time. I think since 1968. Now, it is a very, very lightweight standard. There are 10 fields in a standard 18 payment record. Now, there are 18 characters in the reference. Now, that might seem as limiting in terms of a payment and helping with things like reconciliation. But we've been living with it for a long time. What organisations don't see is it's a very lightweight format. So with 100 characters per record, you can easily carry 1 million records in a file very, very quickly. If you put those same million records into ISO, then that file bloats out by 30, 40 times. So from a point of view of efficiency, that's an important one. It's very easy for an organisation to create enough data for an organisation like Bottomline to create a standard 18 file. For a direct credit payment, we only need to know sort code, account number, account name, an amount and a reference for a payment. That's it. We can build the rest. That makes it really suitable for organisations, especially things like payroll, where you don't need to carry a huge amount of information today. 8583, it's difficult to see definitely any particular strengths around that other than ubiquity and understanding. So it's been around for a long time. It's understood in the card world, but whether it works for immediate payment, I think it's less clear to me why you would pick that over ISO. I think ISO will allow more information to be carried that is more useful in that faster payment journey. So migrating from standard 18 to ISO, this is a really interesting one. It seems to make sense from the point of view of allowing more data. So rather than 18 characters of reference, we are moving to a world of structured remittance information and structured information, rather than just having a sort code and account number to identify the account. The name isn't really used in the payment systems. You can put a name in and that can be checked. The amount of data within standard 18 allows for the centre to do a lot more in terms of looking out for fraud. The data really helps reduce fraud. Extended data is a really interesting one. I was trying to find some data yesterday on how much of SEPA traffic contains extended remittance information. So how much have organisations in Europe made use of the new ability, or the relatively new ability, to carry much more information? There doesn't seem to be anything substantial, and I wonder how much is just still ISO 20022 was just a fairly like-for-like translation from whatever domestic scheme there was before. And I've certainly seen where organisations are moving their corporate traffic from MT messages. So I'm just going to move on to Swift because I think it's important. So MT messages to ISO. They've not been asking us to add extra information. Certainly the ERPs haven't been providing extra information. It's been this is our mandate. We have to do this, so we'll just do the minimum required. There's a lot of change that needs to happen, and we want to do that. So benefits is really difficult, and unless both ends of the process are providing and processing ISO, I think it's going to be a difficult migration. And you can't mandate people to add certain bits of information to a file. I think businesses have kind of got around the problem already, but it will be a really interesting one. I think the lessons from recent SEPA migration is how do you make that journey from standard 18 to ISO less about moving the sort code and account number fields from here to here, to this is some new information, here's some opportunity for you to help the people that you are paying identify their payments, and a way for you to save money and make process more efficient. I think corporates for some extent are going to rely on their ERP and their payroll providers and the billing system providers to be filling in those gaps, and the use cases have to come out, and a lot of them we're not really seeing them.
Fantastic. I'd said checks is a subject we could spend lots of time talking about. I have no doubt we could be doing the same thing about standards and ISO, but I'm sure we'll circle back to that at some point. Richard, we've reached the end of our time together. A massive thanks for you agreeing to come on Payments Unpacked TV and share these thoughts about payments vision, about strategy, about Bacs, all from a corporate's perspective. So thank you so much for that. If you want to reach out to Bottomline, well, just put Bottomline in Google. And if you want to reach out to Richard, type in Richard Ransom on LinkedIn, and I'm sure you'll end up in the right place. But for now, thank you for listening, and be sure to subscribe to this Payments Unpacked TV, or even the Payments Unpacked newsletter at payments-unpacked.com. Thanks very much.
Thank you, Mike.